It's Friday morning. You open your bank app and your money's just gone. The richest country on earth, and somehow everyone's broke. Hey, this is Coinrad, and today we're finding out what really happens if the US economy crashes and how close we actually are. Let's count down from the least likely to the most likely ways it could all break, and what it means for you when the paychecks stop. Number 5. The dollar crisis. It starts overseas. The world loses faith in the US dollar, the same green paper that fuels global trade. Other countries dump US debt, switch to their own currencies, and suddenly, everything we import costs twice as much. Gas, groceries, your phone, all of it. For the average person, that means walking into the store and realizing your paycheck buys half what it did last week. Shipping grinds to a halt. Shelves empty out. A gallon of milk costs $10, and nobody's laughing. Cargo ships sit offshore. Oil barrels priced in yuan. The supermarket feels like 2020 all over again, minus the memes. Sounds terrifying, right? But this one's mostly theory. Every other currency's got bigger problems, and the dollar, for now, still wears the crown. Unless that changes, this sits at a weak 2 out of 10 on the realistic disaster scale. Number 4. The banking shock. Now things get personal. You don't need a world crisis, just a bad weekend. A mid-sized bank collapses, fear spreads, and withdrawals spike. By Monday, ATMs are out of cash, your direct deposit is processing, and your landlord wants real money, not promises. We've already had previews. Silicon Valley Bank, Signature, First Republic. Regulators stepped in fast, but trust doesn't come with insurance. Once people start pulling cash, the panic feeds itself. You'd see temporary outage signs, bank apps frozen, and those awkward news interviews where politicians say, "Your money's safe." You'd know it's not. For an average household, it means paychecks delayed, bills piling up, and a crash course in how fragile digital money really is. That's a 5 out of 10. Not tomorrow, but close enough to smell the smoke. Number 3. The stock market implosion. The stock market isn't the economy until it crashes. When it does, every 401k, pension fund, and investment account turns into a cruel joke. One day, you're on track to retire at 65. The next, you're Googling part-time jobs for seniors. When overvalued tech and real estate finally cave, trillions in wealth vanish overnight. Headlines call it a correction. Your savings call it a disaster. Companies panic, layoffs start, and even if you've never owned a single share, you still feel it through slower raises, tighter credit, and that familiar dread that your job could be next. The markets are supposed to predict the economy. These days, it creates it. When it falls, people stop spending, companies stop earning, and the cycle eats itself. How likely? Pretty high. Valuations are stretched, debts everywhere, and blind faith is what's holding the balloon up. Call it a 6 out of 10. Not a full 2008, but close enough to sting. Number 2. The debt spiral. This nightmare doesn't explode overnight. It tightens slowly. The US owes over $36 trillion, the biggest tab in history. As debt grows, investors want higher interest, so more of the budget goes to payments instead of fixing roads, funding healthcare, or sending Social Security checks. At first, you barely notice. Smaller tax refunds, slower services, maybe your school losing funding. Then it gets personal. Rising prices, shrinking savings, retirement slipping away. Think of America juggling flaming credit cards while Congress argues about who lit them. Not dramatic, just exhausting. Every dollar buys less, every month feels tighter. The middle class keeps shrinking while politicians stall. Can the US print more money? Sure, but that's like repainting a house already on fire. Confidence burns out before the cash does. 7 out of 10, slow, painful, and already happening. Number 1. The political meltdown. The most realistic crash isn't financial, it's political. Picture Washington doing what it does best, fighting itself to a standstill. Congress bickers over the debt ceiling like it's bad reality TV. Bills stall, agencies shut down, paychecks stop. Soldiers, park rangers, teachers waiting on grants, all unpaid. Social security checks? Maybe next month. Meanwhile, the world's watching as the nation printing the global reserve currency can't pay its own workers. Markets panic, treasury yields rise, and for days, maybe weeks, the US flirts with default. This isn't hypothetical, it happens almost every year. Every debt ceiling showdown makes the world hold its breath. One bad decision and the paychecks really stop. No nukes, no aliens, just politics. And that's what makes it terrifyingly believable. 8 out of 10. So what happens if the US economy crashes? Probably not what you picture. No riots or flashing red tickers, just silence. A delayed payment, a missing deposit, a paycheck marked processing. Economies don't explode, they erode. Confidence first, jobs next, stability last. It's a slow grind that turns every paycheck into a survival plan. For most Americans, that erosion's already here. Prices rising faster than wages, savings fading, retirement drifting out of reach. The day the paychecks stop won't look new, just like what's already happening, turned up a notch. So when your bank app glitches or Congress plays chicken with the debt ceiling, remember, even the world's biggest economy is one bad decision away from the ATM line. This is Coinrad. Hit subscribe and stick around for more stories about money, markets, and the madness they create.